For more on finance, we're joined in Sydney by Tony Boyadjian, Senior Vice President of Foreign Exchange at Compass Global Markets. Tony, good morning and good to talk to you. The US dollar fell sharply after the US Federal Reserve Bank policy statement about inflation. What happened there?
Yes, Virginia, that's right. They were quite concerned about the statement itself. The monthly policy statement said that inflation is running below 2%. It basically means that the US Federal Reserve Bank now might be closer to the end of its interest rate hiking cycle than what the market had originally thought. We've seen the US market raise interest rates 3 times in the past 7 months, and the market was expecting another rate hike for September and possibly December this year. Now that's being diminished. It looks like the chance for a September rate hike in the US is as low as 10%, and another one for December is now coming in at less than 50%. So we've seen the US dollar come off its strengths that we saw late last year when Mr. Trump was elected as president. We saw 14-year highs in the US dollar because we were going to see the mantra was to make America great again. There was going to be great fiscal spending, and there was going to be some wonderful reforms with tax cuts and healthcare. None of those have eventuated. So consumer confidence and business confidence in the United States has been very weak, and that's seeing the US dollar lose some of its value, and that's helping, of course, the Aussie dollar.
So is the analysis then that in the US there is a Trump-related malaise or a sense of disappointment in the Trump administration, and that's what's driving this risk aversion?
Certainly, Virginia, there is disappointment, and those headlines are just talking about risk aversion, because some of these business dealings that possibly Congress could investigate, and there are only allegations at the moment against the president, but if it comes to fruition, if there's any evidence there, then the subject of impeachment comes back onto the radar. And when you couple that with some of the lack of reform in tax and in healthcare, then that creates some problems for the US economy. So those inflationary expectations in the US will remain weak, remain subdued, and that's the reason why we believe the US dollar will continue to weaken in the short term.
Yep, and the Australian dollar doing quite well against it.
Certainly. Look, it's strengthened by 5% in the past fortnight. It's a fresh 2-year highs near 80 cents. We actually broke above 80 cents yesterday, reaching a high of 80.6 US. And there are a number of factors helping the Australian economy remain in that growth phase. So we've got some positive figures in terms of our trade surplus. Australia's current account deficit has dwindled to less than 0.6% of GDP. And we've got very robust jobs growth as well. In fact, the last 2 months in Australia, we've seen full-time jobs grow by over 115,000. These are numbers we haven't seen for almost 30 years. So fundamentally, it's good support for the Australian dollar. And that's the reason why we believe there's still some upside, perhaps another 2% upside. We could see the Aussie-US trade up towards 82 cents in coming days.
All right, good to talk to you this morning. Thanks so much.
Pleasure. Thanks, Virginia.